Question 801. Stan conveys an apartment to Ian for 3 years. After the 3 years are up, Ian continues to live in the apartment and Stan does not try to have him evicted. The parties now are said to have A. Tenancy for years, B. Tenancy for non-freehold estate, C. Periodic tenancy, D. No tenancy exists of any kind. Correct answer is C. Periodic tenancy. Let's analyze the types of tenancies. 1. Tenancy for years, or estate for years, is a lease for a definite, fixed period of time. The lease automatically terminates at the end of that period without the need for notice from either party. Stan's initial lease, to Ian for 3 years, was a tenancy for years. 2. Periodic tenancy is a tenancy that runs for a successive, repeating period, e.g., month to month, year to year. It automatically renews at the end of each period unless either the landlord or tenant gives proper notice to terminate. 3. Tenancy at will is a tenancy that lasts only as long as both the landlord and tenant agree. It can be terminated by either party at any time without advance notice, though some jurisdictions require notice. 4. Tenancy at sufferance, or holdover tenancy, occurs when a tenant who rightfully came into possession of the property, e.g., under a lease, remains in possession after the lease expires without the landlord's permission. The landlord can choose to evict them. In this scenario, Ian initially had a tenancy for years for 3 years. After the 3 years, Ian continued to live there, and Stan did not try to evict him, implying permission or acquiescence, and presumably continued to accept rent. When a tenant holds over after a fixed-term lease expires, and the landlord accepts rent, the tenancy typically converts into a periodic tenancy. In most residential situations, if rent was paid monthly, it becomes a month-to-month tenancy. The initial tenancy for years has ended. No tenancy exists is incorrect because Ian is still occupying with at least implied consent. Tenancy for non-freehold estate is too broad, as tenancy for years and periodic tenancy are types of non-freehold estates. Therefore, the parties are now said to have a periodic tenancy. Question 802. Lea pendens remains in effect. A. While the case is being decided, B. During court proceedings, C. Until the court's judgment is final, D. Any of the above. Correct answer is D. Any of the above. A lea pendens is a recorded notice. It alerts everyone that a lawsuit is ongoing. This lawsuit must affect the title or possession of a specific property. The lea pendens stays active throughout the entire legal process. This includes the time the case is being decided. It remains in effect during all court proceedings. The notice only stops being valid when the court's judgment is final. This means after any potential appeals are resolved. Question 803. A deed restriction would be enforced by A. Court injunction, B. Zoning official, C. District attorney, D. The Bureau of Real Estate. Correct answer is A. Court injunction. A deed restriction, also known as a restrictive covenant or CC&R covenants, conditions, and restrictions, is a private agreement that limits how a property can be used. Unlike zoning laws, which are public government regulations, deed restrictions are created by private parties, e.g., a developer for a subdivision, or a previous owner. Their enforcement mechanism is primarily through legal action initiated by those who benefit from the restriction. Zoning officials enforce zoning laws, which are public ordinances set by the local government. They do not typically enforce private deed restrictions, though sometimes deed restrictions may align with or be more restrictive than zoning laws. A district attorney is a public prosecutor who handles criminal cases. Deed restriction violations are civil matters, not criminal ones. The California Bureau of Real Estate, now the Department of Real Estate DRE, licenses and regulates real estate professionals. While they ensure licensees comply with fair housing laws and ethical standards, they do not directly enforce private deed restrictions between property owners. Court injunction is the most common and effective way to enforce a deed restriction. If a property owner violates a deed restriction, a party who has the right to enforce it can file a lawsuit asking a court for an injunction. An injunction is a court order that compels the violating party to stop the prohibited activity or to take specific action to comply with the restriction. Question 804. The Internal Revenue Service will treat a real estate salesperson as an independent contractor if the... Question 804. The Internal Revenue Service will treat a real estate salesperson as an independent contractor if the... A salesperson's compensation is based wholly on sales, not hours worked. B. Salesperson has a real estate license. C. Salesperson has a written contract with his broker stating that the salesperson is to be considered as an independent contractor for tax purposes. D. All of the above requirements must be met. Correct answer is D. All of the above requirements must be met. The Internal Revenue Service, IRS, has specific criteria for classifying real estate salespersons as independent contractors. It's often referred to as statutory non-employees, under Section 3508 of the Internal Revenue Code. For a real estate salesperson to be treated as an independent contractor for federal tax purposes, all of the following conditions must be met. 1. All of the compensation for services performed must be directly related to sales or other output, e.g., commissions, rather than to the number of hours worked. 2. The individual must be a licensed real estate agent. 3. There must be a written contract between the salesperson and the broker providing that the salesperson will not be treated as an employee for federal tax purposes. If any of these conditions are not met, the IRS may classify the salesperson as an employee, which has significant implications for payroll taxes, withholding, and benefits. Question 805. The provision stating, "A realtor shall not publicly disparage the business practice of a competitor," appears in the A. Commissioner's Rules and Regulations, B. California Business and Professions Code, C. County Ordinances, D. NAR Code of Ethics. Correct answer is D. NAR Code of Ethics. The California Real Estate Commissioner's Rules and Regulations, administered by the DRE, govern the conduct of all real estate licensees in California and deal with legal and regulatory compliance. While they cover ethical conduct, this specific phrasing about disparagement of competitors is more characteristic of a professional associations code. California Business and Professions Code is the statutory law in California that includes the real estate law. It defines illegal practices, licensing requirements, and disciplinary actions. While California law forbids unfair competition and misleading ads, it doesn't specifically mention publicly disparaging competitors. That particular standard is a higher ethical expectation. You'll find it within professional codes, not typically in broad legal statutes. County ordinances are local laws and would not contain such a general ethical standard for real estate professionals nationwide or statewide. The National Association of Realtors, NAR, has a comprehensive code of ethics and standards of practice that its members, who are called realtors, must adhere to. This code sets a high standard of professional conduct and often includes provisions regarding interactions with other real estate professionals, including avoiding public disparagement. Specifically, Article 15 of the NAR Code of Ethics addresses this, stating, "Realtors shall not knowingly or recklessly make false or misleading statements about other real estate professionals, their businesses, or their business practices." Older versions, and common interpretations, often use language very similar to the statement provided. Therefore, this provision appears in the NAR Code of Ethics. Question 806. Frank is a plumber who completes a copper repiping job on Noel's house. Noel refuses to pay for the work. Frank should: A. File a mechanic's lien, B. Seek a sheriff's sale. C. Record a foreclosure action. D. Report Noel to the police. Correct answer is A. File a mechanic's lien. A mechanic's lien, often called a construction lien or contractor's lien, is a legal claim against real property for the value of labor, services, or materials furnished for the improvement of that property. If Frank properly files a mechanic's lien, it places an encumbrance on Noel's house, making it difficult for Noel to sell or refinance until the debt is paid. This provides security for Frank's payment. In California, there are specific steps and strict timelines, like preliminary notices, that must be followed to establish a valid mechanic's lien. Filing the mechanic's lien would be the first step for Frank to take. A sheriff's sale is the public auction of a property to satisfy a judgment or lien. This is a later step in the enforcement process, typically after a mechanic's lien has been filed and a lawsuit to foreclose on that lien has been successful in court, resulting in a judgment. Frank cannot directly seek a sheriff's sale without first establishing his claim. A foreclosure action is a lawsuit to enforce a lien, like a mechanic's lien or a mortgage. If Frank isn't paid, his ultimate goal might be to foreclose on the property. However, the crucial first step after non-payment is to file the mechanic's lien. This recorded lien then paves the way for a foreclosure action if the debt remains unpaid. You record the lien, then file a lawsuit to foreclose on it. Refusing to pay for contracted work is generally a civil matter, a breach of contract, not a criminal matter. The police typically do not get involved in civil payment disputes unless there's evidence of criminal fraud, which isn't indicated here. Question 807. Which of the following is not an example of the police power? A. Zoning ordinances. B. Building codes. C. Condemnation. D. Subdivision regulations. Correct answer is C. Condemnation. Police power is the inherent right of the government to regulate private property and individuals for the protection of public health, safety, morals, and general welfare. It does not require compensation to the property owner, unless the regulation goes so far as to constitute a regulatory taking. Zoning ordinances are regulations that dictate how land can be used, e.g., residential, commercial, industrial, and establish rules for development. This is a classic example of police power, as it promotes public welfare by ensuring orderly development and separating incompatible land uses. Building codes are standards for the design, construction, alteration, and maintenance of buildings, enacted to ensure the safety and health of occupants. These are clear exercises of police power. Subdivision regulations are rules that govern the division of a parcel of land into smaller lots for development. They often address street design, utilities, open spaces, and lot sizes to ensure proper infrastructure and public safety. That's making them an exercise of police power. Condemnation is the process by which the government exercises its right of eminent domain. Eminent domain is the government's power to take private property for public use, even if the owner doesn't want to sell, provided just compensation is paid. This is distinct from police power, which regulates property use without taking ownership and generally without compensation, unless it's a regulatory taking. Question 808. If a trust deed is foreclosed upon through the process of judicial foreclosure, then A. There is a legally specified deadline imposed on the foreclosure sale to occur. B. The trustee must file a default notice to the borrower. C. It follows the same procedure as a trustee's sale. D. None of the above. Correct answer is D. None of the above. Answers A, B, and C all apply to the other kind of foreclosure action, the trustee's sale. The borrower has the protection of a one-year redemption period. This is the correct and most significant characteristic of judicial foreclosure in California. When a lender pursues a judicial foreclosure, a key protection for the borrower is the right of redemption, also known as the statutory right of redemption. In California, a borrower typically has a one-year right of redemption after a judicial foreclosure sale if a deficiency judgment is possible. However, this period shortens to 3 months if the sale proceeds fully cover the judgment. This allows the borrower to reclaim their property by paying the sale price plus specific costs. This right of redemption does not exist in a non-judicial, trustees, sale. Question 809. Farmer Brown's orchard was taken away in order to build a freeway. This is done in accordance with A. Eminent domain, B. Police power, C. Dedication, D. Easements. Correct answer is A. Eminent domain. The police power refers to the government's inherent authority to enact laws to protect public health, safety, and welfare. Examples include zoning laws, building codes, and environmental regulations. While this power can sometimes result in restrictions on property rights, it doesn't involve taking property for public use. Dedication is the voluntary transfer of private property to the government for public use. In this case, Farmer Brown did not voluntarily give up his orchard. An easement is a legal right that allows someone to use another person's land for a specific, limited purpose, e.g., a utility company having the right to run power lines across a property. It does not involve the government taking full ownership of the property, though easements can sometimes be acquired through eminent domain. Eminent domain is the government's power to take private property for public use, provided that just compensation is paid to the property owner. Building freeways, schools, and other public infrastructure are common examples of eminent domain. The process of taking the property is called condemnation. In this case, the government took Farmer Brown's orchard to build a freeway, which is considered a public use. Therefore, the government's action in taking Farmer Brown's orchard falls under the power of eminent domain. Question 810. If a lender accepts a deed in lieu of foreclosure, the borrower is still liable for A. Junior liens, B. Mechanics lien, C. Judgments, D. All of the above. Correct answer is D. All of the above. When a lender accepts a deed in lieu of foreclosure, DIL, the borrower voluntarily transfers the deed to the property to the lender to avoid the formal foreclosure process. While a DIL can release the borrower from the primary mortgage debt owed to the lender who accepts the deed, it does not automatically clear all other debts or liens on the property. The DIL generally aims to release the borrower from the debt secured by the mortgage that the lender holds. The DIL generally aims to release the borrower from the debt secured by the mortgage that the lender holds. However, for a complete release, the DIL agreement must explicitly state that the transaction fully satisfies the debt. If the agreement doesn't contain this provision, the lender might still be able to pursue a deficiency judgment for any difference between the property's value and the debt. In California, anti-deficiency laws may offer protection, but it's crucial to have the release explicitly in writing. Junior liens, e.g., second mortgages, mechanics liens, judgment liens, is the critical point. Unlike the foreclosure sale, judicial or non-judicial, which can wipe out or extinguish junior liens, a deed in lieu of foreclosure typically does not extinguish junior liens. When the lender accepts the deed, they take ownership of the property subject to any existing junior liens. If there are other mortgages, junior liens, mechanics liens, or any other liens recorded against the property, the borrower generally remains liable for those. The new owner, the lender who accepted the DIL, will then take title to the property with those liens still attached. This is why lenders often prefer a formal foreclosure, as it provides a cleaner title. Similar to other junior liens, a recorded judgment against the borrower's property would create a lien. A deed in lieu of foreclosure would not automatically eliminate this judgment lien against the property or the borrower's personal liability for the judgment unless the judgment creditor agrees. Therefore, if a lender accepts a deed in lieu of foreclosure, the borrower is generally still liable for all of the above, junior liens, mechanics liens, and judgments, unless specific agreements are made with each of those lien holders for release. The borrower is generally still liable for all of the above, junior liens, mechanics liens, and judgments, unless specific agreements are made with each of those lien holders for release. The DIL primarily addresses the debt owed to the lender accepting the deed.